It's the last week of August, and Peter Hug joins us this Monday to give us the lowdown. He's up next. Pete, thanks for joining me today.
You're welcome, Daniela.
So, Peter, we can definitely say gold has recuperated, hitting a 2.5-month high overnight and flirting with the $1,400 mark this Monday. What are your thoughts?
Well, the market remains constructive, as we've been saying for the past, 10 days. You've got the durable good orders that came out this morning, which were the worst numbers in over a year, indicating that the economy just isn't firing yet. And, with the housing numbers that came out last week, which started the rally and pushed it through 1377, also confirming that the economy may be slowing in that area. Basically reconfirmed that, at least in my mind, that I don't think the Fed is going to move in September. But again, it's an old story, an old record coming out of my mouth. I've been saying it for the better part of 6 months that I really don't see the evidence that would cause the Fed to begin tapering probably until the end of the year.
Peter, so how does the market usually play out the week before Labor Day? Then we'll see traders come back to their desks. Will gold get a bump here? Yeah,
I think the big money, the smart money, technically they're on holiday, but they're not stupid. They watch the news, they watch their charts. They're not going to be surprised by this move. They've been watching it. So you could make the argument that fresh money coming in after Labor Day may continue to push the market higher. Again, I'm a little skeptical. I'm strictly trading these markets from a chart perspective. Once it broke 1377 last week, the 92, 97 range was in play, which we saw Friday, and it's having trouble today getting through 97. I think if it does and closes above 97, 1424 is certainly within the realm of possibility. So constructively, from a technical perspective, the market still looks like it wants to move higher. And, there are going to be events that occur in September that could accelerate the trend. Currently, this market is moving strictly on the basis that they now believe the Fed is not going to taper in September.
Peter, you said we could hit 1424, but I know offline you were telling me hard stop should be considered at 1377.
Yeah, I'm not one of these guys, that you've interviewed or that I've seen blog on Kitco.com that are calling for $2,400, $3,000 an ounce in 6 months. This currently is a constructive market. The people that want this market to go up on the basis that the Fed is not going to taper, I think have got their ammunition, and I think that's what pushed the market higher and knocked out the shorts. But I'm also not an idiot. If gold breaks down through 1377, it's going to create some technical damage, and I'd be putting my stop there just to protect myself. You can't just blindly go and expect this market to continue on the upside without major or at least some significant corrections along the way.
What are you seeing on the silver front, Pete?
Silver, as we talked, my time frames are a little muddled because I was on holiday. I think it was about 2 weeks ago when silver ran the first time up to the 2340 level. I thought it had exaggerated itself, and I thought a move back to the 2240-ish level was in play, which happened early last week. Now we have silver over $24. Now what I'm looking at is, does silver make sense here given the economic climate, right? The ratio on silver went from 65 ounces of silver to an ounce of gold to the current ratio, which is about 57, where I think it's fairly priced. Now, if you look at the market from the perspective that the economy is slowing, I'd be a little reluctant to chase silver here. If I chased silver here, I would chase it with a straddle. I would go long gold against a short silver position or long silver against a short gold position. I'm a little uncomfortable that silver is going to have more momentum. Now, if gold breaks up through 1400 and gets to 1424, $25, $25.20 is certainly in the cards for silver.
All right, Peter, thanks for those thoughts.
You're welcome, Daniela.
And thanks for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching.